All right, folks. Hey, welcome everybody. This is the interview. You know, I love meeting great people all around the Houston area, great entrepreneurs. Some people work for great companies, some people own and run the great companies. And today, we're in this real estate game. We're in a hot real estate market right now. And you know me, folks, I love meeting all these great real estate agents out there. But today, I got a treat. I got a treat for you. And actually, it's a treat for me to be very blunt with you because I get to meet with Jonathon Koester here. And Jonathan is with Envoy Mortgage. And why am I excited to be able to interview with him today? Well, as you can imagine, getting into any sort of a home ownership, you're going to probably have to have a loan. Now, I know there's a lot of cash deals that have been going out there, a lot of cash money been coming into the state, which is great. But for the majority of the people, they're going to need to borrow to buy into that home. So what's really going on out there is what I want to hear from Jonathan. So Jonathan, welcome. Thank you for being here on the interview.
Thank you, Peter. Great to be here. Jonathon Koester, Envoy Mortgage. It's been it's wonderful to be here with you, and it is a hot market. There's a lot going on.
I know it's so busy. He didn't even have time, folks, to put on a dress shirt. He didn't know we were going to do this interview today. So please don't hold it against him that he's wearing a sweatshirt. The guy's working really hard trying to get these deals done, especially at year end here. This is a recording time around December, mid December. So Jonathan, deals. I mean, how do people, so let's start with the basics, right? What do people need to do to get a decent loan? What's the starting points?
The credit score, that's massive. Making sure that your credit score is in line. That's going to give you the best terms available. Making sure that, what the income situation, what your asset situation is. Those are the big three: income, cash, your credit. Those are the things you want to have put together. And even if it's not a perfect situation, we have the tools to help you. We can help you get there. We can coach you there.
So let's talk about credit score. Those guys, I think, are my nemesis. I get frustrated when I see clients dealing with all the credits out there. So we got Vantage or Advantage or whatever they are now, and FICO. And I've seen scores out there with Vantage in the 400-500s, and I've seen FICO in the 640s, 650s, and it confuses the daylights out of me how they can have such a wide spring or swing. Who are you guys predominantly looking at?
Well, we use FICO scores. You will see different algorithms in the marketplace. They're not all created equal. So, your Credit Karma score out there is not really what mortgage lenders and car dealerships are pulling. So
no, it's good to know. Great.
but it should get you hopefully in the same ballpark, and it should give you some good data when you actually look at it and see, oh, I did not pay that, 30 days late, and you want to dispute that. So that's something that is helpful for folks in general. But the credit report we pull when we're lending, hundreds of thousands of dollars is very, very accurate, and that's one of the benefits when you do apply, to be able to look that over and know what the real deal is.
Now you're using the FICO score, and I understand FICO is broken down into multiple different types of FICO scores. There's an auto score, a credit card score, a mortgage score, a FICO 8, a FICO 9, a FICO 10, a FICO 2, 3, 4, FICO 5. I'm assuming it's out there somewhere. I haven't seen FICO 6 lately, but that's okay. Which numbers are you guys pulling? Which FICO score are you looking at?
FICO 8, but we and every lender's going to have their own procedures with that, with what vendors they use.
Got it. So having that right FICO score. So process, first step, let's get that FICO score identified so you and the potential, the buyer can see what may need to be done on that score to make some cleanup on it. Okay, so let's assume we've gone through the process, the 30 days it takes to clean up the score or whatever. They're ready, cash. Now, I've seen some programs out there, some real estate people talking about 3.5% down, 5% down, 10% down, 20% down, conventional jumbo, FHA, VA, MYA, CYA. I don't know. So what's the most common you see out there, Jonathan?
We definitely can. 620 is very like your conventional. It goes down to 620 typically.
Credit score of 620. FICO score 620. Okay,
yeah, that's your conventional buyer. That's out there now. As far as, of course, 850, that's wonderful. That's perfection. So that's your range in that respect. Now you have 580 credit scores that where you can bring in a FHA loan and put 3.5% down on it. If you're a first-time home buyer, you can put 3% down on conventional lending. Traditional is typically 5% down. And then, of course, there's 20% down is great. You avoid PMI. There's ways to buy out of it as well. So there's a lot of things that we can help, to really help people understand what's possible.
So PMI, private mortgage insurance, is that what it stands for? So that's
Correct.
basically getting insurance so that the lender knows that if you default, somebody else, this mortgage company is going to go ahead and take care of the bill. Is that how it works?
The insurance policy on it, correct, so that the lender is not on the hook for a big loss if they foreclose like right after closing type of a thing. So
Got it.
until that loan's paid down, that for conventional lending, it'll be able to come off.
Very cool. Now, we had talked about this in some of our discussions, and I think it's fair to bring up in the interview here. I've seen this before. I lived in California in 2006, 7, 8. Actually, it was 6, 7, 5, 6, 7, and I've seen these big upswings in real estate market. And back then, as you joked earlier, if you fog a mirror, you got a loan. As a financial advisor, I get a little concerned, and that people may go do a cash out refi or try to get some money out of their real estate, and next thing you know, we could have a correction. What if we have a 20% correction in real estate? What if we have a 30% correction in real estate? Are we at risk that people are going to walk away from being so far upside down like we had in 08?
Yeah, I lived through that myself. I was in the business in 2000, and so saw the front end of it, the middle point, and the end of it. So I definitely know it's no fun when we see those big corrections. But remember, big difference is the type of quality of loans that were being produced then and now are completely different. As you mentioned, lending standards, subprime mortgages, those are a big deal back there, with people getting 2-3 homes, putting very little down. Now it's never been harder if you're self-employed, especially since COVID hit, to get a mortgage. And so we're seeing much better credit standards from where we were in 08. So that's a nice difference in the quality of lending.
So they've tightened up the standards, a little more difficult, if not a lot more difficult, to get the loan. But now we have some safety in place here. So if we do have a correction, yes, it's possible you could go upside down, but they're trying to keep the consumer from making that mistake again.
You're
It's
not getting the arms, or we don't even have a prepayment penalty program in our company. So there's a lot of those things that are much different.
That's actually really good to hear, because as fun and as exciting as it was way back when to have the real estate as an asset class, and I love real estate as asset classes, as an asset class. I tell you that the fallout was just devastating, and I think we need to protect the consumer, keep the consumer from making kind of a really poor decision. So that's great to hear. Now, Jonathan, they got the credit score, cash down anywhere from the 3 on the first time home buyer up to, let's say, 20, up to or more, right? What kind of process are you running this through, and then how long does this take now? I mean, can you get it done in a couple weeks? Does it take 6 months? What's it take? I mean,
Sure. Well, the beautiful thing that I love about Envoy and our process is we do everything up front. So it kind of takes the guesswork out of things. I'm sure you've heard the horror stories with the moving trucks in the driveway, and we've heard those stories. So what we do is we address the cash, credit, and income up front in a strong pre-approval. We actually meet the underwriter up front, and we have a loan that's been approved on those 3 fronts. And then it's just about title work and the appraisal, if we need an appraisal. So those are the 2 things that we're going to look at. And that way it gives them confidence. They're good for 120 days with that approval. They can go house shopping and then have the confidence that they'll be okay, which is great. So that helps a ton.
that is unique. I mean, I hear real estate agents say all the time, don't start looking for a house until you have approval. So you're not just giving a conditional approval, You're giving full on approval. You have confidence working with you. I've heard, and maybe you can address this because again, if I read it on the internet, it must be true, right? So I've heard that some companies out there, maybe some of the online companies, give these conditional approvals, give these kind of loosey goosey approval type thing.
It's a credit pre-qualification. Yeah, it's a lot different because it's
So
basically just eyeballing it, looking at the credit. Yeah, it looks good, but yeah, we want a full pre-approval that's been underwritten. Very nice. Big difference.
big difference. Now we can get that pre-approval with you done, presuming the credit score is decent up front. Does that take a week or two to get something like that done through you all with your
Typically
workloads?
to get the full letter, like we want to do about 48 hours to have it run through our underwriting team and
Oh,
stamp.
wow.
And so yeah, that'll be what we're looking for. Now, of course, we can still do those pre-qualification letters, and immediately we get that out the door to say, looks good, but hang tight. Let's get all these
Yeah.
documents looked at. So that happens very quickly, but assuming everything looks good on the surface, but we do dig deeper so that we don't have issues. And that way our realtors are happy, and of course our clients are happy. And then those happen. Now that you said the process, traditionally we like to see 30 days on a contract, but when they've already been through underwriting, it's about how long we need to get the appraisal back. So 2 weeks can happen, 21 days is about average, and 30 days is always safe, is what I like to say.
That's really cool. So I love that you're doing the pre-approval. You're getting this all knocked out up front. So now it's just onto the house side itself. And so in other words, somebody could come in and get pre-approved up to whatever that dollar amount is. Now they could go shop for up to that amount. The real estate agent knows what they qualify for, so they don't try to upsell them. And now it's just a matter of, okay, go find your house. You got pre-approved for it. Don't buy a car. Now I've heard that horror story. So
don't quit your job. Don't buy a car. That's right.
don't quit your job. Don't take out credit for anything else during this interim, right? So
right.
Really great. Jonathon, this has been a great quick introduction here. I promise people to keep this at 15 minutes. I think we've got great information that we're sharing. How do people get a hold of you?
Absolutely. The best way is to call my number, 832-310-3760. And my team and I are happy to take care of you, answer your questions, and get you on the right path for homeownership.
Now, can somebody go to a website and just start a process with you right away? Do you have one of those kind of websites, or do you want to talk to them first?
Yeah, that works great. That's usually the best first step that we direct them to. It's www.talk2jon.com, talk2jon.com.
Oh, that's unique. I love that one. So really, anybody out there looking to finance, especially now, are you doing commercial lending? I forgot to ask you earlier.
No, residential only. And we actually just got the new conforming and FHA loan limits out that just hit a huge increase because of values are a lot higher. So now there's $647,200 for a conventional conforming loan amount, which is a huge jump because you're talking normally that would have been a jumbo loan you would have needed there with all those different loans. And now FHA is up to $420,680. So that is that's great. So that really handles our market pretty well when you look at the average.
Yeah, that from what I've seen out there from the agents that I know, some of them have been on our interview. I think that's going to handle the Houston marketplace fairly well. Jonathon, thank you again for your time. Thank you for being with us on the interview. And man, I hope to have you back sometime soon. You have yourself a Merry Christmas if I don't talk to you beforehand.
Thanks so much, Peter. Take care.
My pleasure.